15/16s. Oh, we've just been scratched in the remainder of that trade. So that was my average price on that candle, 71 15/16s. And we took it from 15/16s to a high price there of 24s, nearly 10 ticks. And that's perfectly good, guys, because that gets my stop in at break even. We never took out the bottom edge liquidity, which was my concern, but now we have. And obviously that's what we were watching, that's what we were expecting. But as I said, the market never went bid from that, but it went bid enough. That's all I need. That's all I need. It went bid enough to give me a 10-tick profit and a stop at break even. And for that reason, I've ended up making about $2,000 or $3,000. So we wait for the next opportunity, which is happening again as we speak. There's a very big value in this to buy into, and we watch the clock. The timer is on the clock. We'll be watching this ticking down to about 14:09 and 50 seconds, 55 seconds, and we start watching for the opportunity to lean against those sellers. Sellers are starting to come in, starting to get the trade on, starting to look for the opportunities, and we're watching the clock ticking down to try and time the entry with our entry prices, with the time prices, and with the algorithmic buyers that should come back in off the down ticking bid here. So very, very cautious, very careful, very timed, very sensitively, ready to go again, guys. Just letting it drop, letting it drop, letting it drop, letting it drop. Doing nothing at this stage. We are 2 minutes, 30 seconds away from being able to do a trade here. Just letting it drop just now, guys, letting it drop. And you see how that starts to work, Paul? You've probably experienced it more than most people, because you've always watched the clock ticking down as the gold algorithms get ready to purr. When you watch that clock ticking down on these algorithms, you can start to really recognize the value of watching the clock as the trade evolves. It's a very, very important aspect of trading, because if I know that that's the perfect time for the perfect trade, anywhere else is going to be a little bit more risky, isn't it? Anything else is going to be a little bit more risky for me. Anyway, I did have some buy limits in my oil there. I didn't get filled on them, but we've started to buy on the way back off that. So that's okay. We've got 25 contracts on oil, and we've just seen another $2,500 profit from those 25 contracts, and I will be booking some of that money. Yep. Booked some of that money, guys. I've already taken it. It's already in my bank account. And my average price on that is $70.96. $70.96 was my average price, guys. So there was my average price there, $70.96. Bought 25 lots into that little down phase. And average price is $70.96. It's gone up to a high price of 71.10s, 15s, and we've managed to get a few more $1,000s out of that trade. So no danger on that one. And obviously we lost the clock on that one. That's why I decided to buy into it. We started to see some very heavy book buyers coming in, and the very, very heavy book buyers obviously caused the problem here. But this could still close towards the lows, which would give you the right time of the day to pick up some of that business. Look at the value on this, guys. Look at the value on that. That's huge, right? That's exactly the value we want for a buy trade off these low prints. Perfect. Exactly as we thought was going to happen. They were going to run the stops at 71 evens. That's exactly what they did do. So again, the discussion about the narrative, the discussion about what they're expecting and why they're expecting it, just puts us into the perfect trade at the perfect price. Careful around your dollar. Obviously, the dollar dropping off. The nominal's looking pretty bullish still for the dollar. So buyers on discounts at the moment on the DX. The bond still selling off quite nicely, guys. Obviously, in line with that storyline, the sell on bonds from the 15/16s back down all the way to 5s. So the sell on bonds has worked out a treat. I think myself and Reeve were on that trade. You can see the sell on bonds worked out a treat against the inflation break-evens on these pullbacks. And we've got a very, very good progression to the downside. Still looks very bearish against inflation break-evens at the moment. And that's what we're kind of looking for. That's what we're kind of looking for. We're obviously watching this on a pullback, perhaps into these areas here. We can start to recognize maybe this area as a pullback location. If we can get up into that area, of course, with that value, it'd be a definite sell, wouldn't it? 100%, 100%, guys. A definite sell opportunity.